Welcome back to my channel. In this video, I wanted to cover Alibaba. Alibaba primarily is an e-commerce company operating in China, Asia, and some other parts of the world. It does operate in the US in a limited way directly with businesses that want to order from China. It's quite interesting what they're trying to do. Overall, I think of Alibaba as the Amazon in China. And their founder, Jack Ma, spent time in the United States and observed what the US was doing in the connected economy. And he took back those ideas, including his experience with Amazon, and he created Alibaba. Nicely done, Mr. Ma. You've created a great company serving many customers in Asia. I wanted to take a look at Alibaba and revisit why I think the business is desirable. I'm also going to value the stock, determine what I think each share is worth based on the free cash flows the company is going to produce in the future and their earnings per share. Overall, this is a stock that's been performing well for the past year. It's one of the top performers, especially big caps in 2025. Let's see if that's going to keep going or if it's going to fade. They announced their earnings yesterday, and I have a fresh set of financials to take a look at to see how they're doing from a free cash flow perspective, their revenue growth, their profitability, their momentum. I'm going to look at that closely. And I'm going to try to answer why the stock went down more than 7% today. So let's get into Alibaba. Let's examine the company, their financials, and I'll make a decision whether I should buy more shares of Alibaba, hold the shares I already own, or sell my shares in Alibaba. Let's get going. Baba is a $281 billion market cap company. It is the most valuable China stock that is provided in the United States on an ADR. So nicely done, Alibaba. Their revenue is $137 billion. So you're paying a little over 2 times revenue for the company. Their PE ratio is 16.77, forward P of 12. Not bad. Small dividend, 0.79. Analysts believe that it is discounted by 24%. It's a strong buy. Year to date, it's up 46%. Nicely done. And for the 1 year, it's looking good, 55%. It has had its moments where volatility has really lowered the price of Alibaba. Perfect. I like volatility. If the market discounts great companies, gives me a great price, I'll take it. And I bought shares of Alibaba on these lows. So my shares of Alibaba are doing well. So let's take a look at their financials, and then I'm going to look at their earnings release and kind of reveal the things that I think were positives and negatives on their earnings. Long term, this has been a growth stock. It's been growing every year. Very, very impressive to grow every year. They've gotten fairly big. This is in the Chinese yuan. And in order to turn that into US dollars, you multiply times 0.14. So we're dealing with about a $130 billion revenue business when we look at it in US dollars, growing at close to 6%. The most recent quarter did grow at 6.57. That looks good. And they grew their cloud business fastest, specifically around AI. They are rolling out AI in Asia. They'll probably be the AI provider that a lot of Chinese companies will turn to. And their free cash flows have been flat for 2 years. And that is a little bit of a concern. I'll show free cash flows, and that's going to be where one of my concerns is around the company. Their gross margin, because they are an e-commerce company, is 39.95. That's normal. Good profit margin, good free cash flow margin as well. So at this point, I wanted to take a look at their financial statements, or excuse me, their earnings. And here's where Alibaba is spending a lot of money in their data centers for AI. And this is in US dollars. They had $22.5 billion of cash produced from operations. And this is for the full year. Their year ends March 31st. And they spent a lot of money in that data center. If you compare it to the previous year, they spent more than $8 billion more this year. And that, I think, is what made the stock drop today. That extra cash they're putting in that data center, they're deploying capital I think investors are nervous. Is AI going to have a good return on investment? Is that going to have a good payoff? We will see. It'll either be a very good deployment of capital or it'll be a poor one. And right now, investors, they don't like uncertainty. I don't like uncertainty, and that is a little bit of a risk item. The other things around their financials or their earnings were good. The revenue is good. They're growing in the right areas of AI. The other thing that people forget is Alibaba owns a good portion of Ant Group. Ant Group is a financial services company in Asia, and that is very valuable. So it kind of gets lost in the Alibaba stock. Let's look at the balance sheet. They have a lot of cash, and this is in US dollars. They have $58.9 billion of cash and debt of $31.7 billion. So net cash at $27 billion. Beautiful. They can fund those AI projects, they can grow the business, they produce positive cash. Very solid balance sheet. I'm going to give them an A when it comes to balance sheet. Looking at what analysts think of Alibaba, 13 analysts cover the stock, and they think the most optimistic analyst thinks it could rise to $190 per share. The worst case scenario analyst down to $100 a share. Not too bad. So on average, it's discounted by 24%. Pretty good discount on a quality company. When we look at their forecast, and we're going to look at FY 2026 because we're already operating in FY 2026. That this fiscal year will end March 31st of 2026. And the company is supposed to grow about 7%. That's very good. And they're going to expand their profits by about 14.68. Very good. 40 analysts are weighing in, and that's where that forecast is coming from. So that's a pretty solid forecast. Good revenue growth and so forth. Now, something that's important to note is the tariff war, the argument, call it whatever, between China and the US. We got some really good news over the weekend, and it caused the market to really rally. And if those tariffs get put to rest, that's great news for Alibaba. Because if they hadn't been resolved, it would have been a big cloud over the stock. So it was very good news for Alibaba for those tariffs to be put to rest. So I've got my financial data, I've got my free cash flow data, got my earnings per share data, got my cash, debt. Let's move on and take a look at the desirability of Alibaba. The desirability of Alibaba. I put Alibaba mostly in the most desirable space of my quadrants, which is a company that has a very strong moat and grows, creates profit and cash flow. Now, on the revenue growth, I'm not overly excited with 7%. So I'm moving them closer to the left where you have lower desirability due to lack of growth. So I'm moving them a little bit into the gray. But I do like their cash flow. And I do like their profitability. When I compare Alibaba on a moat, I think their moat's terrific in China and Asia. They're the number one player there. And I think they're going to stay there. Their peer company is Amazon, and Amazon's clearly a top company in the green, dominant moat in both e-commerce, AWS business. So it's a good peer company. And they're not quite at Amazon's level, but they're closer to Amazon than Macy's. Macy's is a retailer, and boy, they've just been going down over the last 30 years. E-commerce is eaten at their margins, eaten at their market share. You don't want to be Macy's. You want to be more like Amazon. And I think that Alibaba is more like Amazon. So their desirability is high. When I scorecard their desirability, let's go over moat. First, competition. I think they do have some competition, but they're the best in Asia. So I give them a B. Network power, an A. I think everything Alibaba in Asia has that strong brand that Alibaba brings. They also came out with their AI model, and it gained a lot of respect. And I think a lot of people are going to use the large language model from Alibaba. Balance sheet's excellent. I showed it to you. They have lots of cash to spare and more cash coming. Revenue isn't growing very fast. I'd like to see it grow faster. Maybe AI will help them there. Profitability is good. And then the cash flow. They're spending a lot of money in that data center. So that's a little bit of a worry. Nothing to be too alarmed with, but they don't get an A grade there. So those B's mixed in there are what caused me to put them a little bit in that gray. So how would I invest in Alibaba? Is I need to get a discount. It doesn't have to be a crazy discount, but I need a discount. They're not quite Amazon. Amazon, I'll buy at fair price, but Alibaba, I need to get a small discount. 5 super investors own Alibaba. David Tepper being the most notable one. And he, on my super investor stack ranking, he's number one. He's invested in Alibaba and other Chinese stocks as well as the right tech stocks. So his portfolio is up like 15% year to date. He's doing great. Dwayne Yongping owns it. Samantha McLemore, Francis Chow, and then Guy Spear. Guy Spear is like top 3 or 4 on my rankings. So those who went with Chinese stocks this year are outperforming their rivals. 5 super investors own Alibaba. Very interesting. So what is each share of Alibaba worth? I'm going to answer that question in this segment. I'm also going to make my decision on whether I'm going to buy, hold, or sell Alibaba. I'm going to look at the cash forecast of the business and then value those cash flows to get to an intrinsic value per share. I'm also going to look at earnings per share and do a similar process to get to a value per share based on earnings per share. Let's start with cash flow and then we'll blend the two. So cash flow. I got a new set of numbers with their earnings announcement. I was able to update the most recent year close. Their year just closed March 31st. I'm going to use that as my starting point, and I'm going to grow the first 4 years by 10%. The business is growing by 7%, and if they can reduce their spend in that data center, they are definitely going to hit 10% or better. So 10% will be a good number, and that'll grow the first 4 years. After that, they're going to grow by 5% in terminal value. I'm going to discount Alibaba by 10%, which is 2 full percentage points higher than Amazon because they're in China and I'm in the US. It's a greater risk for me. So I want a higher rate of return. Using 10% as a discount rate, I'm going to discount this whole cash flow forecast and I get $252 billion of value. I'm going to add the $59 billion of cash and take away the $25 billion of debt. I get to $286 billion of value. When I net it down per share, each share is worth about $126 per share. The stock market will sell you shares at $124. So it's priced fairly when we look at free cash flows. Earnings per share is quite better. Using a reasonable PE of 18, it's a growing business in the right category. You can easily use a 24 or a 30, but I'm going to go 18. Using earnings per share in dollars, growing that earnings per share by 7%, which is lower than the growth rate that consensus believes they're going to grow, I get a 40% discount on their stock. I'm going to use the free cash flow as a greater weight, 2/3 of the weight, 1/3 earnings per share, and I get a 19% discount on Alibaba. Alibaba is a buy at 19%, especially with the stock being discounted today by more than 7%. Alibaba is going to be the dominant player in China. As we see that the tariffs are being resolved, the Chinese economy is going to flourish. Alibaba is going to flourish. And it's a very good way for me to diversify away from my US stocks. I love my US stocks. I own a lot of US stocks. It's good to have some stocks outside of my home country of the US. So that said, I'm going to be buying Alibaba shares on dips. So that is my video on Alibaba. I'd like to ask you to become a member of my channel. You can get more details on the description of the video, as well as on the homepage of my YouTube channel. It's easy to take a look at the information, and I'd really appreciate you considering being a member of my channel. It'd be great to talk to you on member calls. You'll get a lot of perks. Please consider it. So thanks so much for watching, and good luck with your investments.